Hello traders, this is Rich from Tradesight. This is the market preview for Friday, May 9th, 2014. We had kind of a two-way trade today where we had some strength during the middle of the day, only to see that fizzle out and essentially close just a little bit lower on both the ES and the NQ. The Dow did scratch out a little bit of a high, but definitely the broad market was a little bit stronger than the Nasdaq side. The Nasdaq side still fairly weak. Also here, I want to talk about the Russell today. The Russell was down a full 1% today, which is definitely more signs that the rotation is still in place, but we're really not making any net headway here in the market overall. The advanced declines were minus 500 issues on New York. We're minus a full 1,000 issues on the Nasdaq side. So that's another pretty poor reading on the NQ side of the market. So without further ado, let's move on and take a look at the major markets. All right, first up, let's start with the NQ futures. They were really driving the bus today. You can see that we did try this. Look at the tail up here. They did try to take this up higher, but it didn't really work. It closed it down on the day. The one thing to take away here, though, this is a camouflage buy signal because even though we were well off the highs, what we did post was we did close above the open after a 2-day drop, even though we were lower on the day. So this is a camouflage buy signal or a contra candle, if you will. So definitely figure that into the mix for tomorrow. Key levels to watch are going to be the 4-ace level at 39, at 35.93, and then to the downside, this 2-ace level at 35.15, and then the week's low will come in just behind that. The ES futures have kind of a similar design, but they're a little bit more closely spaced here. We don't have that camouflage signal. We're basically still churning around this 1875 area, waiting to get some separation away from that. And don't forget though that it's okay that we're churning in this area because we are winding up with power and energy. And once we do break away from this area, should have some bite to it. Here's a look at the Russell. I think the notable thing about the Russell is that we did make a new low close on the move. We're seeing significant weakness here. We're down in the area of the low close, which was around the 2-ace level from this previous candle way back here in early February. So definitely a lot of weakness here. We're below all the major moving averages. The small caps have really been under siege. We don't talk about the small cap indexes a lot, but we're kind of on the cusp of being able to turn down here, which would really be important to the market and the broad market in general. The other thing to take away here is that there's really no support here from the seeker to come in here and buffer it. We don't even have a 9-bar drop locked in the setup phase, much less an exhaustion warning. So definitely keep that in mind. All right, here's a look at the cumulative advanced decline lines. You can see the Nasdaq continues to plunge lower here. Next real levels that's going to come into play here is the previous low from September. That'd be a big deal if we got all the way down there. The ES side of the market is starting to top off here, but it's still holding up okay for now. We're down today, but we haven't been printing nearly the negative numbers that the Nasdaq side has. Keep in mind that with this move to the downside of the Nasdaq, if the Nasdaq does start to right the ship and we do start to see some bidding strength in the Nasdaq, the ESI could easily start to power back up here and really start to whack out some pretty important new highs. But for now, that's not the case. That could develop, but for now, we're still seeing relative weakness in the Nasdaq side of the market. One little bright point for the market is the SOX NDX cross. SOX did start to roll to the downside here, losing relative strength versus the NDX, but the SOX have come on fairly sharply and are starting to curl up here and are in a position to challenge the previous high here, and relative strength in the SOX always tends to be good for the Nasdaq. So while we've had a lot of weakness in the BTK, we are seeing some rotation into the semiconductor. So make sure that they're being reviewed when you're doing your charts in the evening. SanDisk made a new high in the move today. So there's a lot going on out there. So make sure you're in a position to profit from it. For a multi-sector chart today, I want to take a look at the old school just because of the position that we're in with the market today. since it was relatively flat. We saw some more weakness here in the XAU. We also saw a fair amount of weakness in the BTK. That's the red line, so that's really pretty weak. A little bit of a bump up here in the banking index, and the in the semiconductors are obviously really the leadership right now, and still trying to hang tight. Okay, so here individual sectors ranked from best to worst. Semiconductors, top gun. Pretty strong day. The telecom was also fairly strong, which sometimes also fits with the SOX. BKX also had a decent day relative to the broad market. The real weakness today, as we talked about in the last chart, was the BTK, which were very, very weak. The oil services also were fairly weak after having a pretty good start. Rig gapped up after earnings, and they really just sold into it all day. So they're starting to see a little fatigue there in the OSX. The broker dealers were fairly weak, which throws a little cold water on the BKX being a little bit strong on a relative basis. You want to see them working together more. Transports were also fairly decent today. No, not doing too much, but outperforming the market by a little bit, which is what you want to see happen right now in the cycle. I want to start with the housing sector, the HGX. We don't talk about this a lot, but this just flashed a 13 exhaustion buy. Don't have much to show for it. It's not a signal that has a lot of extension. Here's your one candle. Here's your 13 down here from yesterday. But we do have a 13 in place, and generally the 13 at the very least will mark the end of an impulse. So definitely make sure you're looking over these charts here for perhaps a little upside in that particular index. SOX was up about half a percent. Tried these higher prices, wasn't really able to get there. Actually try to get into this gap a little bit. Ultimately kind of succumbed and closed right at the high of this previous range. So definitely trying to see a little bit out of the SOX. We do have this 13 in place. We did have the impulse to the downside and did get the 9 bars down, which is what you're looking for after that 13 exhaustion. Now we want to see if they can hold on to their relative strength and cook back to the upside here. BKX index was still below the 10 EMA, so if they can kind of rate this and use the 200 DMA here as support, we can start talking about the 4-ace level and possibly even a reversal in trend. Transport's not showing too much today. They did try a new high here, but it was rejected and it got stuffed back down. 13 exhaustion is still in place, so we're really still feeling the effects from that. That's the end of the impulse. So we've got to give some time here to work that off and start to kind of circle the wagons here. But you definitely want to see this chart, especially holding up today, and in the days ahead. Also, you want to see the oil services, the OSX, hold up. But we had kind of a tough day today. Opened up near the 8-ace level, engulfed the previous candle. We're still in this range, but if we break out of this range, especially to the downside, that's going to be negative for the market overall, and the bulls do not want to see that happen. BTK was the last laggard today. Didn't really do much to move it out of the range here, but it's still feeling the effects of being under the 50 DMA and the 10 right now. So really just kind of gaming this 4-ace level for now, but you don't want to see this little area of trading between 3-ace and 5-ace lost. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.